Hi, how's everybody doing? This is Mr. and Mrs. Silver Fox Forex. I'm back with another training tip video. And this video here is going to be entitled Stop Losses and Why Are Stop Losses Important? Why are Take Profits important? And I think the issue that we have, guys, is that we assume that the market's going to go in our direction whenever we want it to, and then we end up losing. So I'm going to take you guys over to the charts real quick. And the problem that I see is we have $100,000 account or 50,000 or 10 or 15 or whatever, and then you guys over leverage for one. Two, you don't have a stop loss or a take profit in place to help you guys win in trading, and I don't get that. So many traders are like, oh yeah, I'm the big boss man, I don't use the stop loss, take profit, I know what I'm doing. It's all fine and dandy until karma comes back and bites you in the rear because you think you're Mr. Know-It-All. There's nothing wrong with having a stop loss or a take profit. If I enter a trade, let's say I'm making sure everything lines up, okay? I'm on my original chart, the 30 and the 1 hour. Matter of fact, let me go to my other graph here. My other chart I made, I think this is it here. 15 and 30. All right, better. 15 and 30 minute and 5. Okay, so I told you guys going to change it, to better, so you guys can better see what I'm talking about with more information and closer to the trade. Now, I'm going to get in my trade and I'm looking for the setup. I don't see nothing here. I don't see nothing here. I don't see nothing here. I'm still not confident. I don't see anything here, but things are starting to change because we're starting to go above the waterline. The stochastics looks like it's getting ready to go up. That's on the 5. On the 15, we're small, but we're creeping above the waterline. And on the 30 minute, we're still below the waterline, but we're blue. I got my signals to say, get ready to take this trade. Now, as I always tell you guys, you're looking for this candle to close on or above, and it's above or on and below. Excuse me, for you guys ready to take a trade. This candle closed on or above, so it's above. Now, if you're more aggressive, you can get in here if you want to. I like being conservative. I may not catch that. Oh well, so what? I'm safe though. I'm here. My stop is 20 pips. It never came back down that far. And let's say I did write it out to here. 33 pips. Now, if this is true and my spread is 4 and I come past 4, guys do the math. It's not hard. It's not hard. If I'm doing $100 a pip, okay, times, let's just say 30. I'm going to take the spread out the equation. Now this will be one more pip, but it's all good. It's relevant. I'm telling you. $3,000. $3,000 from here to here. Let me show you guys. Where I got in a trade between here and here. This move made $3,000. Depending on your spread and your broker, you might be looking more like 27, 26. They got to get their cut. It all depends. Plus the spread. But let's just say $3,000. Okay, call it about $3,000. This made you $3,000. Now you could have waited for the pullback because everything is still looking to go up for a sale. I like to be more conservative and just know that my trade is going to be as close as to what it is that I'm looking for. And I have my stop loss in place. And you know why I have my stop loss in place? I have my stop loss in place for this. My trade's going up. My trade's going up. My trade's going up. I'm not out yet. My trade's going up. Up, this candle come up. You know what? And it comes down. And guess what? You've already adjusted your stop loss. This comes down and hits your stop loss. You're in profit. So let's see what your profit would be. Up there we know it's 33 pips, 34. We took it out. Get down to about 24 pips. So you got taken out at 24 pips. You got taken out at 24 pips in profit. Now you got again minus the broker free fees depending on what broker you're with and spread. So let's say between $21 and $2,400. This move made you $2,000. Are you really making $2,000 a day punching a clock? Or you know what I'm saying? It's got to be you have to be a supervisor or a manager at a company that you're helping run in order to make over 100,000 a year, just to be like, okay, I'm clearing about $5,000, $6,000 a month. If your job is good and you're getting paid between $4,000 and $6,000 a month and you like it, cool, stick with it and still trade however you want to do it. But for those that are looking to say, hey, I don't want to work no more, I don't want a boss. I'm my own boss because the only employee I have to look over is me. If I'm late coming back from my break or breakfast, it's on me. If I miss that move, it's on me. If I don't catch that at the end of close, it's on me because you're the only employee that you have to worry about. So you hold yourself accountable. $2,000 for one day. Okay, let's just say on average you're averaging about $2,000 a day. 2K times, we're not going to do 5 days, we're going to do 4 days. Okay, 5 could be iffy. It depends if you're starting on Sunday nights or if you're ending, you know what I'm saying, Friday noon, whatever the case may be. Let's just, because it's supposed to be like 5.5 trading days. Let's just say 4 straight days of trading, and you're averaging 2 grand. That's $8,000 a week. Okay? A week. It's normally 4 weeks in a month. $32,000 a month. 12 months in a year. I'll take that back. 32,000 times 12. 12 months in a year. $384,000. Now, if this was your real account and you built this up, that's what you could average at the end of the year. But let's just say, for argument's sake, that you're trading with a prop firm company and this is what you generated for the year. Now, majority of them take 20% away. Minus 20%, $76,800. You've still made $307,000 for the year. Let's just say wherever you're at, your state tax or whatever, let's say minus 22%. Another $67,584, right? You still made $239,000, okay? For the year. For the year. Divided by 12. $19,000, almost $20,000 a month. 20K a month. That is somebody's salary on a low-end job. $20,000 a month after you paid your prop firm, after you paid your taxes out. And not all prop firms are bad. There are some that's getting their hand caught in the cookie jar, yes, but there are some that are very legit. Proprietary trading is what they used to do back in the day when they would just take you to a firm and train you up and just train you up, not give you any capital till you can prove to them on a demo that you were ready to go ahead. And it's the same thing, to just allow more people to trade now to get that freedom. So your stop loss is important because why? If your stop loss stays in place, you're always in profit. You're able to bring home that $239,000 for the year. Keep your stop losses in place, guys. Stop listening to some of these guys that I feel just just lead you down the wrong path. Your stop loss is important. We just stayed in profit with that trade, right? With this move right here. So now we're gonna wait for the pullback. We're waiting for the pullback, waiting for the pullback, waiting for the pullback. Between this candle, where this candle closes and this candle opens, is where you're gonna get in there. Either here no later than here. And you had to wait 5, 10, 15, 20, 25, 30, 35 to 40 minutes for your next move. And that's fine. That's within that 4-hour span that you're putting in that work. You're going to get in here and right up here to the next, before it hits the next pullback. That's 40 pips, guys. 40 pips. Let's do this again. Get in here. Get out here. Should be out. This is your stop, right? Because we got in this trade. Our stop loss was 20 pips. Never even reached the 20 pips. Never even went down that way. But it went up. Got your 40 pips. Okay? And what we did was we adjusted our stop loss. We adjusted our stop loss because why? We adjusted all the way up to this point. When this candle jumped over here, we thought it was going to go up some, but it didn't. It met resistance. Came back down. Now you're out to trade. It's all good. So from here to here, in actuality, 34 pips, ladies and gentlemen. Go back over to the Mr. Calculator. 34 pips times 100. $3,400 minus the broker, the spread, $3,000, 3,200, whatever it pays out. Let's say you average that a day times 4, 13,000 times another 4 for the month, 4 weeks in a month, 54,000 times 12. Now you made $652,000. We're going to minus the 20% for the prop firm, 130,000. It's a lot, but hey, stick with me, stick with me. 522,000 minus your 22% for your taxes, because you got to pay taxes. Okay, another 114,000. You just made $407,000. $407,000, ladies and gentlemen. Okay? Divided by 12 months in a year. You're bringing home $33,000 and $945 a month. Almost $34,000 a month. Now that's really somebody's salary that you're making in a month, what they're making in a year. $400,000, you've already paid out your taxes. You paid out the prop firm. If you tithe and you go to church and you give your 10%, whatever it is you do, you paid all it out and you still get all that money to live on. Again, you're the only employee when you don't make this move, or you can't wait and sit and wait for this pattern to show before this move to happen. You're the only one at fault for that. This is why your stop loss is important, because why? You didn't take a L. You didn't take a loss. You adjusted your stop loss. You adjusted your stop loss so you can stay in profit. Let's do it again, ladies and gentlemen. You're going to get out about here. Okay, let's see how many pips that is, because we're waiting to get in a trade when that candle closed between there and there. Get back in the trade here, up to the top. 47 pips. Okay, we're going to adjust our stop loss. This is acting like our stop loss. We're going to go up, 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 up. We think this candle is going to go up, but we're adjusting the stop loss. It went up just a hair. Now it's going to shoot back down and take you out. Okay, it's all cool. It's all good. We got in here 41 pips. You see what I'm saying? Do you guys see the pattern that I'm getting at here? 41 times $100 a pip, because you're trading a standard, $100 a pip. $4,100 minus the spread, but we just gonna keep it where it's at. $4,100 for the day. We're not trading 5 days, we're trading 4 days. You can do 5, but I'm just saying if you get a good 4 solid days in. 16,400 for the week. Times 4 weeks in a month. $65,000 a month. Okay? Times 12. $787,000 a month. Total net gross. We're going to minus 20% for the prop firm, because this is about standard what we're doing for the year, okay? 157,000 down to 629. Minus your state. You're about 8,000 and something shy of making $500,000 for the whole year. Total income for you to do whatever it is that you want to do with it. You've paid your taxes, you paid the prop firm company. Out of $500,000 for the year, you guys should be living very, very nice. Now, here's something I want to show you guys. We're going to divide this by 12. So after your taxes came out, you still left with $40,000, $934, not $40,934.40 for the month. Okay, stick with me. If you can average between $30,000 and $40,000 a month, why not pay your bills off for the whole year so you have the whole year to trade and everything will be straight profit? That's why you adjust your stop loss so that you're always in profit that you're not using. Once you see it going up, you adjust that stop loss. I don't care if it hits your stop loss, you're in profit. You walked away with $10, $100, $500. Adjust that stop loss. But why not pay your bills off for the whole year? Let's say you make this January and you come back again and make this February. Okay? You're not spending anything from January. You got that 40 grand in the bank, 30 grand. You make another 40 or 30. You need to call the light company, the water company, the mortgage company, credit card company, whoever it is that you have. You need to call them and say, hey, what would be my balance for paying you guys up for the whole entire year? You know, Mr. Peanut is going to take 8,000 for the whole year, 20,000 for the whole year, or 6,000 for the whole year, however it breaks down. Now you just paid all your bills up for the whole year in the month of February. March, April, May, June, July, August, September, October, November, December. You have 10 months of profit in your pocket because you adjusted your stop loss. You didn't do like a lot of people, oh, I can lose $20,000, I can lose $500, I'm leave my stop loss where it's at. No, you adjust your stop loss so you stay in profit. That's the name of the game, is to make money, not lose money. Every day is not going to be a winning day, but guess what? You adjusted your stop loss, you're in profit, and you're not losing. Now, you're going to have some red days, but those red days are going to be small. Why are they going to be small? Because you adjusted your stop loss. You had that stop loss in place to save you so you don't blow your account. It's nice. Your stop loss is your savior, your protector, your guide. This is how you protect yourself in the market when you have pullbacks, when you have strong reversals to shoot straight down, and then you don't know what to do because your account's been blown. Guys, keep your stop losses in place, keep your take profits in place, because if you're, I'm going to show you guys right now. Auto stop. Not going to change it. My take profit is 40 pips. My stop loss is 20 pips. I have this in here so when I enter a trade, I can adjust this to whatever I want. I can adjust this if I'm sitting in front of the computer to whatever I want. But generally, if I'm not sitting in front of the computer, I'm going to make this smaller and still make my profit about 40. I'm good with that because I can't watch it, can't see it. I know it's going to hit 40 pips or something like that. I'm good. But if I'm sitting in front of it, I can adjust this. This gives me the room in case I enter a trade, buy or sell, then the next thing you know, it just whacks down on me and I'm out of the $2,000 that I said I was going to lose, but I really didn't want to lose. I'm going to adjust this. I'm going to adjust this, and I'm going to adjust this. You can play around with this and adjust it. Mine's is set for 40 and 20. Guess what? Once I see it's going up, I'm moving that stop loss up. I'm moving that stop loss up. If I'm seeing I'm going past 30 or 40 pips, I'm going to move it up. But if I see that I'm not, I'm going to go ahead. Once I see it starts to do the reversal or the pullback, I'm going to come out of it because I'm watching it. I can do that. But when you're not watching it, have those parameters set in place so that you're not in trouble like that, so that everything is going good for you guys. I hope this video was helpful for you guys. Take care and happy trading.